So welcome everybody online. Thanks for hopping on a Friday. Everybody here in person. Thanks for coming. So, this is selling 60 units a year, working with investors. So a lot of what we're going to talk about today is also applicable to your own investing journey, if that's something that you're interested in. Because inherently, you're going to be the best agent to represent somebody if you are also doing analysis and things like that, as if you were actually the end buyer. So, so it's super exciting. That is not only relevant to you working with your clients and getting more investor clients, but also, how does this actually end up helping you out? So, for those of you who have ever been in my class before, the first question I ask, sorry, clicker works. There we go. Is what are you looking to get from today? And you showed up for some reason. And I always like to make sure that we're aligned with, I'm answering questions. So there's been, questions that were like, hey, I want to learn this. I was like, hey, that's actually not in the slides, but like it's relevant to the topic. So let's chat about that. So anybody online or you all kind of, why'd you come today? What are you looking to get?
I personally want to see what type of what exactly what the investors want to see, like the exact calculation. That's going to be
cool. Okay, so you're looking at calculations for your investors. Yes. How do you make that? Things like that. Yes. Okay, great. And what was your name?
Elon.
Elon?
Yeah.
Awesome. Thanks, Elon.
His last name is Musk.
Yeah. Billionaire entrepreneur. That would be amazing. Cool.
I just wanted to get more knowledge on working with investors. Yeah, because I have a few, and I just want to be able to just give them the value. You know how we talk about as a realtor, you want to bring to the table value.
Yeah.
So I want to be able to be so knowledgeable in the value that I'm bringing, because most investors are already educated to some degree.
Sure.
So you want to kind of look smarter than they are.
Yeah.
Otherwise, why would they hire me? So yeah.
Right. Exactly.
That's where I'm at.
So Angie's just looking at like general value, like how can I give value to these guys that are already, in a lot of cases, really smart. Yeah, Elon.
Yes, I just one niche, one detail that I really want to figure. Investors ask me, is this property for rental or for resale? That's for me something I would. Yeah.
So you bring a deal and they say, is this a better flip or a better rental?
Yeah.
Cool. We can definitely go. If I haven't touched on it, just remind me to talk about return on equity, because that's going to be a big thing. So awesome. Anybody online? We got a chat here. Let's see. Oh, that was Melissa. Anybody online want to pop on real quick and let's get one person online to say, why do you show up? What are you looking to get? That page.
Oh, good morning. I am here to learn exactly what investors are looking for realtors.
Cool. So what the investors are looking for you to do?
Exactly. Yes. Thank you.
Yeah, I got it.
Oh, you got that? Okay. Thanks, Angie. Awesome. So just a little plug here. One of the reasons why I am teaching so much is to become a Keller Williams certified instructor. So one of the things, really the last step in my journey is just to get 75 reviews. So if you guys wouldn't mind, if you guys are on a computer right now, you want to go ahead to this site, pull it up, get it ready. It's kwueval.com. And then it's going to take you right to a page that's basically like a survey. And you're going to go to instructor not in dropdown and course not in dropdown. So these are both different courses. And I'm sorry, I have that course wrong. It's actually selling 60 houses working with investors, not wealth building as realtor. So this will be at the end as well. But if you guys want to go ahead and pull it up, I know it usually gets busy. People are like, you finish the class, you got that cost scheduled right after. But this is super helpful for me as you go through that. And if anybody has any questions, just let me know about this. So that being said, who am I? So my name is Austin Carroll. I really have two businesses. So I have my real estate sales team, and then I also have a large development company and portfolio myself. And so that portfolio is over $12 million now. I'll tell little stories about my journey. Oh yeah, I'm sorry.
Closer to your front.
Okay, cool. Can you guys hear a little better now? Cool. Let me know if you guys are having a hard time hearing or anything online. So, my journey really started first in development, and it actually started working with our regional director, Kimber McKeedy and Bo McKeedy at the McKeedy Group, 7, 8 years ago. And I started working in their development company, and there really learned a ton about real estate development and how do I actually own real estate and things like that. And then I started building my own portfolio. While at the same time, I said, hey, I need a business to fund me putting money into real estate. And it kind of makes a lot of sense for me to be a realtor. So I kind of made a lateral move, became an agent on their team. And, after about 6 or 9 months of kind of getting my feet wet with the industry, moved up to Baltimore and started my own team. So the Blue Key team is the name of our team. Last year, we were number 5 in the region for units. And if you look at the regional leaderboards every month, I think we've been on it every month this year. So number 1 the last 2 months, I'm pretty sure. So last year we did 84 deals, and about 60 of those deals were some sort of investment capacity, whether that be somebody that's just buying a house to live in for a year or 2 and then they're going to move out and rent it, or whether it's legitimately a flip or a rental or something like that for someone. And then this year I was also one of the 50 finalists for the 30 under 30 that the National Association of Realtors does. So exciting year all around. I have a 1-year-old. I thought I had a photo, but my daughter just turned 1 3 days ago on the 10th. So that's also been a kind of a crazy year. So, running 2 companies, having a family, like you can do this. And we're going to talk about how that kind of happens. So really the first question where I always like to start this class is asking a legitimate question of, is working with investors for you? Some people just kind of come to things, and like we're getting more into like commercial real estate as a sales team. And so like the more agents we talk to, like a large majority of people are like, hey, I'd love to do that. But ultimately, after having a conversation, it ends up just being kind of like shiny object syndrome. I think that's going to be easier than what my current path of business is. And so I think this is a really good question to ask yourself of like, do you love doing numbers? Do you love finding deals? Do you love, you're going to end up doing more volume working with investors than you do, or I'm sorry, number of units than you do working with your homeowners that are buying, $300,000, $400,000, $500,000, $600,000 houses versus your investor that might be, closer to 100,000 or 200,000. So like, do you like doing that volume? And so these are questions that I think, you're not going to have the answer for it right away, but start to do a couple investor deals if you haven't already. And as you go through that journey, like it's okay to narrow your focus and say, hey, I really like listing regular people's houses, or hey, I really like working with first-time home buyers. So I always like to provide that caveat, because as you put together your business plan, and in Keller Williams, we have the GPS or the 135. And if you guys have a question on what that is, like ask your market center to kind of do trainings and stuff on that. But that's basically your 1-page business plan. You might have as one of your pillars for the business plan, and it is for mine, investors. And so really you just want to understand, is that something for you? So I always like to start that. But then like, why should you work with investors? Investors are really great to work with. And so just to give you a couple of things that I really like about working with investors. Number 1, you can build much deeper relationships that are much more frequent. You go sell a house and you really love the couple or, the person you're working with, you're going to chat with them, you're going to connect with them, but you're not going to usually work with them again for what, 2-3 years if you're lucky, right? And so, you might have events and connect with them, but you can't really create that really deep relationship. Like we get into a lot of stuff, like we learn about people's lives when we're helping them buy houses. And, you don't do that as much, or you do that a lot more with investors than you do with a regular homeowner. So volume, like you can get, one investor will buy 4, 5, 6 houses if you do it right, and you're finding them good deals and they can recycle capital and things like that. A flip is almost always 2 transactions. If you set it up right, you're helping them buy it and then you're helping them sell it, right? So you think about like how you can actually get a business that functions really, really well just on a couple of people. there's, if anybody knows, John Newman in our market center in Keller Williams flagship, he built his business working with like one or two really big hedge fund type investors. And so like he would just be working really, really good with him. And like still a lot of his business is him working with that gentleman. And so it's a really cool relationship, and they have, you know, a really deep relationship. So those are some of the things that you get when you're working with investors. You can also like, I look at investors as a hedge against any other market conditions that are happening, right? All of a sudden there's less buyers out there for some reason, and you know, there's more listings and things like that, like the opposite of what we've seen. Well, dig deeper into your investor business, right? Because that's usually a buying opportunity for investors. So it's a really good hedge to the kind of a multifaceted business where you're not just first-time home buyers and not just sellers, but you can kind of do a little bit of everything. So that being said, any questions so far? Cool, awesome. So who in here owns investment properties? Angie. What, and raise your hand online if you do as well. Participants. Cool. So online, raise your hand if you have an investment property. And Angie, tell me a little bit about your experience. Like, how did you get started with investment properties? Like, how do you have one?
Well, 20 years ago, my dad died and gave me left some money.
Okay.
So I took that money. I'm from California, so I got that money and I put 60,000 down on a 350,000 4-unit.
Awesome.
There's no prices like that in LA right now, okay? But that was 20 years ago. So I did that, and I just tried to maintain it, you know, because it was, some of them were Section 8 tenants. I put a little bit of money in to fix it, tried to raise the rents, and I kept it for about, you know, I think 8 years or 10 years.
Okay.
And in the meantime, I acquired other, like every time I would get a little extra money, I would put it down. And then I got like a place in Vegas when things were going really crazy in Nevada in 2006. Then I got a little condo, then, you know, it would come my way, these little properties.
Cool.
And I've sold all of them now, except
Okay.
one.
Okay.
I kept the one that was making the most right now in LA, and I'm looking to take that money and reinvest it here. But that's for me personally.
Yeah, no, I mean,
Yeah.
that's great. How did you come to the decision of selling? Just out of curiosity.
Different life events that were happening, and also, you know, we were moving from wanting to acquire equity to want to maintain a monthly income because we're seniors. My husband and I, he's going to be retiring soon. So we didn't necessarily wanted to just have equity or many homes or a big portfolio. We're more interested in the monthly rentals. And in California, you don't get monthly, your money is made when on the resale value.
Yeah, absolutely. So that's a fantastic journey. So your life circumstances change, and think about this as if Angie was your client, right? Like all the time, you know, a lot of the questions about how do we provide value to our clients, a lot of it comes in advising them, you know, like walking them through. And sometimes, like, why do we hire business coaches? Why do we hire counselors, right? Like a lot of times it's to reflect back what we're not taking the time to reflect with ourselves on. And so at some point, you and your husband decided like, hey, we've got a lot of equity, but we don't have a lot of cash flow. So let's sell these and let's actually look for cash flowing assets, because we want to simplify. We want to make sure that we're getting monthly income, not just, you know, we're going to sell this in 5 years and get the money. So I love that journey. And that's going to be the journey that you're going to be helping people with along the way. And really, like, this is the analysis. I have investors that come to me all the time and they'll say, hey, should I sell this property? And so, you know, a quick answer to that, like, I will never give them my opinion. I will say, let's look at the numbers, right? And like, that's a really good, I think, rule anytime you're working with investors is like, you can give your opinion, but you can get in trouble with your opinion, right? Because your opinion can be wrong. And so like a lot of times an investor is looking for you for confidence, right? And so part of the way kind of around that is to say, let's look at the numbers. You know, I will never tell an investor, unless it's like a fantastically good deal, and I'm like, you would be silly if you didn't buy this. In which case I will usually tell them, if you don't buy it, I will buy it. And I've done that multiple times. But what you want to say is, let's go back to the numbers. And so the number that you would look at if they're looking at selling a rental, or deciding between a flip and a rental, right, Elon, which what you asked a little bit earlier, is you're going to look at something called return on equity. And return on equity is just a calculation of, if they were to sell that asset, how much cash would they get? So factor in all the costs and stuff like that, divided by how much cash flow is generated every year. And it's on a yearly basis, right? So you take not the monthly cash flow, but the yearly cash flow, and you're going to look at that. And so, you know, let's say if they sold it, they would get $100,000, and it's making them $10,000 a year, so a little under $1,000 a month, right? And that would be a pretty good deal. Now, that the answer to that is the ROE, the return on equity, is 10%. And then the question I always follow up and ask them, once we know what that number is I say, do you think you can get higher than a 10% return elsewhere? Right? And so if the answer is yes, you know, for me, my portfolio, we usually look at 20 to 25%. 10%, if I had a return on equity of 10%, I'd be okay with keeping it. It doesn't move the needle enough for me to go through the process of selling and finding something new. But if that came back at like 5%, I'd probably be saying, yeah, let's take that cash and let's invest it in something else, because I'm looking for a 20 or 25% return. And so that's how we always bring it back to the numbers. So the more you can have conversations where you're bringing it back to the numbers versus bringing it back to emotions, the more successful you're going to be in helping that client out. So that's your Elon. You don't have to remind me anymore. That's our that's our calculation there. So, you know, kind of what Andrew was asking a little bit earlier, and I believe it was also Paige was asking, is like, you know, like, how do I provide value to investors? And I think there's a couple ways that you can do this, and you want to identify what your value propositions are. They aren't going to be everything in here. You're going to decide that like certain things are for you. So for example, my value proposition to an investor is not writing 20 offers a week. Like, that is not what I'm going to do for an investor. And if an investor wants that, you know, they're going to submit, you know, 60% of asking price on 20 offers, and maybe one every 2 or 3 months hits. Like, that's not going to be me as an agent. Now, a new agent that has a ton of time, that actually might be a really good value proposition. It's like, I don't mind breaking tons of offers. I had a buddy, he would do this for himself. He would literally just like block out the time between like 11 p.m. and like 2 a.m. He would scour the market, and he would just send really messy offers to all these different people. If you guys have ever had listings that just give you like basically a term sheet that's, you know, 60% of the asking price, it's just these agents that are just going through the MLS. They know they've got cash buyers for, you know, X amount of a return. They run the calculation. They send you a quick term sheet, right? And so, you know, every once in a while you're going to hit with that, right? But the majority of the time, like, that's not going to be me. But that might be you, right? And so look at what is your value. I'm really good at analyzing properties. And the way I got really good at analyzing properties, by the way, everybody in here can do it. A little secret, right? Like, I just analyzed thousands of properties, you know, like, and then I kind of followed up a little bit and saw what happened after the fact. And this actually happened for me before I was an agent. I was an employee at the development company at the Mankiti Group, and we had a hard time finding deals in DC. So the solution to it was for me to look at every deal that came on the MLS. So I analyzed every deal. I had a binder about this thick. I had a sheet that I would fill out for every property, and I would run a quick pro forma. You know, I would basically sort into three columns. One was like, I'm going to do a very quick analysis on it, but this $2 million condo is probably not going to be a good cash flow investment, right? I was underwriting to cash flow. And so that was a pretty quick throwaway, you know. Then you had this middle group that was like, it might be, I don't really know, you know, like maybe it's a good deal. And then you had the like, this is actually pretty good. Let me do an in-depth pro forma on this. And just to define pro forma too, it's a financial analysis, usually in a spreadsheet that's done. And so I had those 3 categories, and then I would definitely get the good ones done in a day. The middle ones, if it was a slow day, I would make sure that I would run the in-depth pro forma on those. And then after you do hundreds or thousands of those, you start to recognize patterns. You know, Gary Keller talks about when he talks to hundreds and thousands of people that are successful agents, like he'd be silly if he didn't recognize patterns. And it's the same thing as you start to analyze properties and you start to see this correlation between different areas and things like that. And so I was actually just talking to one of my agents earlier today, and he got a couple investing clients. We had kind of a couple leads come in, they were investor clients, and I said, hey, you know, these are yours, right? Like you've done some investing analysis and stuff like that with me before. And we just had a coaching call a little bit earlier today, and he asked the question like, okay, like how do I find those properties? It was like, at first you spend 2 or 3 hours sitting down on the MLS and then just kind of looking at stuff, like what makes sense. Like, you know, I give him some areas and stuff that I would start in. He kind of knows it from working with me before. But you're just going to start with that. Then you're going to set up some auto searches once you understand kind of what your clients' needs are. You know, are they a cash flow? Like these people were like, hey, I've got, you know, $100,000 to invest and I want 500 a month. And so like that's their parameters. And so that's another thing that you want to make sure investors do for you is define what they want as much as possible. Because the clearer they are, the more success you're going to have. Just like if somebody came to you and they were a regular buyer or a regular seller, and you know the buyer came to you and said, you know, hey Elon, I want to buy a house. Can you help me with that? What's your answer?
Let's come to my office. Let's sit down and talk and go. Let's go through your numbers. What you're looking for? Let's talk about it.
Yeah, so you're taking it to the next step of the needs analysis, but they're just like, Elon, I just want a house.
So then I'm gonna say, okay, so what's your price range and around what type of house? Do you want a single family or you want like a 2-unit property? Which area in the neighborhood? What type of neighborhood is it?
Yeah, and so you're doing the exact thing that you should do, which is get them to be specific, right? Because it's really hard to help somebody that just says, I just want a house. You know, if you don't actually drill down, and this is a lot of new agents do this, right? Like they're just like, okay, great, I'll send you some houses. They're like, great, let's go look at them. We go look at 6 houses. Nah, none of those were good, right? And if you don't follow up and ask questions to get feedback on why not, like you're just gonna drive yourself crazy. And so the more specific, like I love it when a client comes to me and is like, I want this neighborhood. I want, you know, 4 beds and 2.5 baths, and I want it to be within this price range. And when they're realistic, man, that's an easy client to work with, right? Because you go on 5 showings, you know, like you only show that when it comes, and then as long as they're realistic, like you get it done. So that's no different with investors. And I would venture to say that the most important terms to ask them is how much available capital do you have? Do you want to do any work? And what do you expect in returns? And different people are going to have different answers for the returns. Some people it's going to be a monthly cash flow number. Other people are going to be a percentage, right? And so both of those things work. You just have to then convert them in. How do I help this person? So a little bit of a tangent from your value proposition, but all of those things, like as a good agent, part of your value proposition is kind of coaching them into something specific. Right. And so like I've helped plenty of clients that keep trying to get broad when I'm trying to get them narrow. And then our coaching conversation is like, I can only help you if we get more narrow, right? I understand that this is let me close that door.
Yeah.
Thank you. I know, right? So that's really kind of what you're looking for, is to get specific. So, you know, that's part of your value proposition, is coaching them through the process so that they can get specific. Elon?
2 questions really. One is that one investor told me, like, if you ask too many questions, investors are going to run away from you. Meaning, just give us good deals. That's what they're saying.
Yeah. Be wary of that investor, right? Because a good like if you ask me what I want as my investment portfolio, right? Like I want things in Baltimore City. I have probably 5 to 10 neighborhoods that I like stuff in. I want something with a front yard and a front porch that I can buy under $100,000. I can put less than $50,000 into it, and it's worth somewhere between $160,000 and $200,000, and it cash flows me at least $300 a month, and I can pull, you know, enough of my capital out that I get between a 20 and a 25% return. Could you find me something like that, like pretty easily right now on the MLS, probably?
Yes.
Right. And so if I was just saying, send me good deals, my question to that investor is, well, how many deals do you have? And they're probably gonna say 0. Like, this is not when I teach wealth building classes. I talk about like people don't have a problem of like finding deals. They have a problem of analyzing deals disguised as a funnel problem, right? You all have access to the MLS, and there are deals 100% on the MLS. Absolutely. I buy them off of the MLS. And so the question now becomes, do you know how to analyze those and analyze them quickly? You do need to get to them quickly. The good deals will be gone in a day or two, you know, or a couple of days, whatever it is. But do you know how to analyze it so you can come up with a good price and also beat other people to it, right? So like that investor, you probably, like the whole point of the investor stuff, like talking about it earlier, like do you want to work with investors? You also have to be selective in who you work with. Like probably 80% of the people that want to say that, you know, want to be investors will never become investors.
Why is that?
It's shiny object, right? Like people don't take the work to understand investments themselves. And then they're not actually going to end up pulling the trigger, right? Their friends are going to come along and say, you know, buy some Bitcoin or something like that instead, and they're going to put their capital there. You know, eventually they'll probably buy something, but is it 5 or 10 years down the road, or is it their primary house that becomes an investment? Honestly, not enough people do the work to understand risk in real estate investments, and that's what our job is. And so it's kind of like if you think about it like an athlete or something like that, like you want to start with somebody that at least has characteristics that are good to become a good investor. So like, do you want to invest with or have a client that's the most conservative person in the world? No, like they're going to underwrite themselves out of every deal. You know, they're going to have a huge margin.
I don't know, the investor who's an actualist, which is good, but he's punching numbers on Excel all the time. Like it's almost impossible to work with it because every deal he rejects, like.
Well, and as long as you get good feedback, and then it's an expectations conversation, right? And so Elon was saying he is an investor that, you know, crunches the numbers. I love clients that crunch the numbers because then I don't have to do it for them. But then I'm gonna say, send me your pro forma and let me look at it. And then if I see that they're like, oh, I got $1,500 a month in repairs, you know, it's like, what does that mean? Your hot water heater is going up every month, you know? Like, what is this? And so now you can have a conversation around the inputs. And then it's either the inputs are off or the deal is not a good deal, right? Or there might be some other factors. Maybe they're not well capitalized or something like that. But you can actually learn from that. So sometimes the other thing is that investors can be great teachers to you. The best agents learn from them, learn from good investors, right? You don't want to take cues from bad investors, but people that actually are accumulating stuff, you want to understand. This is like surprisingly enough, like I'm relatively surprised when I learn new stuff in investing these days. Just because like I'm laser focused and I'm doing so much in it. I ask a lot of questions of everybody in the process. But we had a client a couple months ago that ended up like we worked out a seller financing deal. And like that's something that I've never really done much of in seller financing, mostly because during my career of investing, our interest rates have been so low, you know, in the last 6-7 years that I've been investing, they've been so low. So it hasn't really made a lot of sense to do seller financing. But this deal actually made a ton of sense. And when we were done negotiating, I was like, wow, like this is actually a fantastic deal from them that I wouldn't have seen on the face of the deal because we analyzed it differently. And so, you know, Elon, you definitely want to take cues if they're smart, but then you want to have conversations about the inputs. And if their inputs are out of line, then you want to have expectations conversations.
Yeah, it's like I did that once actually. We made a deal with that's going to happen. Deal that like so. But once I did what you just told me, it didn't come to me naturally. But then I told him, give me your numbers. You said the custom evaluation is this. Let's go through this.
Yeah.
And it took some time, but I was able to show him. I said, you're making like $30,000 on this deal. If you want to renovate it, what's your why don't you want to go ahead with it?
Right.
It's a good deal. We did it, and it happened.
And it was good at the end.
Yeah,
Great. Great. Yeah. So Elon, you know, he worked through a deal like that, which is great. Yeah. So back to kind of different value propositions you can get. Analyzing is absolutely one. Off-market connections. You know, this is something that over the years I've built. This isn't something that comes, you know, overnight, but there's a lot of, I do no marketing myself for off-market stuff. I do think that there's I think you're an agent or you're a wholesaler, right? And some people blur those lines. That's just my personal ethics. I think it's really hard to go into a conversation knowing that I'm going to wholesale this property when in reality I could represent them as a seller and get more money. So that, that's my personal beliefs. However, I have a lot of wholesalers that I will represent buyers for. And so I'm on tons of mailing lists. If I pulled up my email right now, there'd probably be 30 emails from today because I haven't really been on top of it today. And so, to be able to quickly go through those deals and then send the good deals to my investors and say, hey, here's actually some pretty decent off-market deals. And then people invariably always ask the question, like, how do you build that list? Facebook groups, finding the wholesaler Facebook groups, putting your email everywhere. Some wholesalers go to events and give everybody your card. That's one of the few things that I do think wholesalers are typically pretty good at putting your information into a database because they have lead flow and then they have a database that they sell that lead flow through. And so they're actually pretty good at that. So, those would be, the two main ways that I would look at that. And then actually go look at some of their stuff. When they have an open house, go meet them, introduce yourself, because once you have a deal that they've sent you and you have a buyer, then you want to have some sort of relationship. And so it's really easy now. Like my wholesalers know exactly what I'm looking for. And so quite frequently, if it's an area or something like that I like, they'll send it to me first because they know either I want to buy it or one of my investors wants to buy it. Yeah,
Where do you find your wholesalers and where do they have their open house?
Ultimately, it's just in the Facebook groups, and then what ends up happening is people will sell their lists back and forth. So quite frequently, I have no clue how I got on a certain, list or something like that. But like putting your time to it, and then, friends will forward me email and I'll click, sign up, So you're just like doing those extra things, but a lot of it ends up being online or at events where you put your cards out, or if it's an event you have to sign up for, maybe it's $50 or $100. A lot of times they'll have sponsors for that, and then they'll send the attendee or they'll sell the attendee list, the wholesalers and stuff like that. So go to that stuff, and then eventually like stuff will start popping up. And then they'll always advertise their like open house stuff on the email, or you call them and say like, hey, I want to see this, and they'll say, oh, I got 5 investors coming through in 2 days, or, something like that.
What about like assignments?
Lonnie, I'm sorry, what was that?
What about like assignments?
Is that like from your end or?
No, when you see it, like, because lately there's been a lot of assignments coming up on MLS. So like,
MLS. Yeah, good question. So if you see an assignment on the MLS, then they're probably working with a wholesaler. So if you'd like to get their emails and stuff like that, then you can always, message them. That is a wholesaler that is probably employing an agent to put it on the MLS for them. Or it's the agent themselves that is trying to wholesale it, which again, we get into some like ethically murky areas. But that's a perfectly fine thing for you to represent a client for if it's a good deal. You may have to manage things like, we personally bought a property and the wholesalers make 40 grand. Like it was a lot. And like at first, like your first instinct is like, I could have gotten it for less, right? But I know there were multiple offers and I knew actually we won it because of our relationship. They just got an incredibly good deal from the seller. And it's like, man, that seller just really did not know what they were, what they had there. And so, so that's something you might have to manage with their client too, because they might see that and go to closing and be like, hey, I'm not going to buy this deal. And then you got to bring it back to the numbers and say, this is still a good deal. Just because they're making 40 grand doesn't mean they have wiggle room, because they'll just go to the next guy that was going to buy it. Angie, did you have a question?
Yeah, I have a question. So I had a wholesaler who reached out to me and wanted to buy this property. His conditions were that he wanted the opportunity to reassign during, while it's being on contract. He wanted the ability to reassign it to someone else, but he wanted a 7-day inspection.
So you were representing a seller and a wholesaler.
No, I was representing the wholesaler. He wanted me to.
Oh, okay.
He wanted me to reach out to the agent who was representing the seller.
Interesting. What happened?
And the guy was willing to sell it, asking price, all cash, but he wouldn't give him the 7-day inspection. He said, do inspections before we're going to contract. And I didn't understand what's the difference. I should check to see if that property is still on sale, because that guy was ready to buy it.
Yeah,
And he wanted to obviously resell it to someone else, what was in contract, and we
right.
understood that, and they understood that, but why would he, I mean, it was like a shell,
Yeah,
so why would he not, why was he so eminent about the fact that he wanted 7 days inspections?
that's an interesting question. Maybe he wanted to make sure that he got it locked up with somebody else in that 7 days.
And he
And
needed
got
to
like
pay that.
earnest money or something. Yeah, I'm always wary, like agents will inevitably ask me, or like I had a seller who was also getting mailed from wholesalers, and then he was like, hey, this guy's offering me 125K cash or whatever, and we're listed at like 130. He was like, no closing costs, no commissions, no anything. And I was like, what's the name on it? You know, I was like, I know those guys. Here's an email that I get from them, right? They're gonna try to sell it for 140K, you know, and it's just like it's invariably going to fall apart, you know. So you could waste your time, like it's fine, you know, you
Yeah.
can try that.
Yeah,
But I know what's gonna happen.
Yeah.
In 3 weeks, we're gonna have this conversation.
yeah, I just didn't know the thought behind I'm not familiar, I was the first wholesaler that I spoken to, so I wasn't familiar with how.
Yeah,
Right,
yeah.
anyways, go
Yeah,
ahead.
yeah, good call, Elon.
So I want to go back to the analyzing part. Me as an agent, how can I educate myself in analyzing? One way is that you just said, ask the investor, give me a forma. What other suggestions do you have?
Yeah, come to classes, build your own pro forma. We're gonna talk about that in a little bit. And then just do it. You know, it's like how you get better at anything, like just by doing it, right? And so like that is like my point behind analyzing is just do it. And then like if you don't know if it's good or not, or if your analysis is good or not, find people in your market center, other agents that work with investors, and ask them like, hey, is this good? You know, like how's my analysis, right? And so just doing just the practice of it. Yeah, that's it. Yeah, it's simple. Like a lot of things are simpler than you think, but they are still very hard to do. Like they're not easy, but they're simple. Like a lot of really good things in life, like that is the answer to it, you know? So just to kind of finish up going through things that I think could be good value propositions. We've got analyzing, we've got off-market connections. We talked a little bit about hungry and able to get, you know, a ton of offers out, like that might be your value proposition. We'll give them leverage. Sometimes it's like, hey, I will go meet contractors at the site for you, you know, during the inspection period, or, you know, even prior to that. I'll call and find you contractors through my network. You know, that might actually be a good leverage piece that you can give them. Again, if you're like early getting started in the business and like you want to find ways, like that might not be the best thing for somebody who's super busy and already has a big business, but somebody that's relatively new or wants to build their pipeline more, you know, that's a big time piece that you can give the investors back time. Communicate, you know, a lot of times when investors are dealing with agents, a lot of agents don't follow up and communicate, you know, and we've all been, you know, guilty of this at some point in time. We get extra busy with other clients, we don't respond timely, things like that. And so that can sometimes be the challenge here. And so if you're making sure that you're communicating with your investor and finding ways to get things done, again, that kind of goes back into that time piece. Educate or coach your client. We talked about that, you know, help them get specific, help them understand why am I investing, you know, different things like that. Being well connected. So this might be through lenders and things like that. And it's probably going to be through more lenders than just your normal Fannie Freddie mortgage people, right? Like this is going to be your community bank connections. This is going to be your hard money connections. This is going to be, you know, any private money or anything like that that you can help them to find. Like those are going to be really good connections for them. And ultimately that's how we get like good commercial deals. Like that's part of the way that we're bridging it, is we're really good at financing. Like we've got a lot of connections with all the community banks in the area. And so I can always connect somebody with like, hey, you know, this commercial property that you can't, there's a small pool of lenders that do this, like we'll help put it together for you. Right. And so we're like kind of positioning ourselves as the step between somebody who's doing a decent portfolio of single family or small multifamily stuff to the step up of the commercial stuff and kind of learning that. So that's kind of like some of our value propositions. We get into more commercial stuff. And then being creative, you know, sometimes being creative in a deal is what helps it come together. And so whether that be like, you know, hey, we had a bad inspection, so we're gonna, you know, try to up the price and, you know, do different things like that. We've got I teach a creative finance class. And so in that, like we talk about some of the stuff where you start to learn like, okay, well, if I pay for this property in cash, but I loan it from another entity, and then I can actually get a lower rate when I cash out, refinance it. Like there's all this creative stuff that you can do when you're kind of figuring that stuff out. And it helps when you are an investor yourself, because under all of this, the value proposition is also them asking the question, like, are you going to be able to help me, and are you a successful investor in some fashion, or have you helped lots of successful investors? And so for me, like that's an immediate kind of thing. If I just tell them I have a portfolio of 80 plus properties, 80 plus units, and like that immediately gets me enough, like they don't ask me any other questions about like, can you help me, right? It's more of like, do I want to help them, and do we have a good fit together? And so, go buy some properties. That's a good value proposition. Other people will pick their area, especially, this might be especially true with flippers. You pick an area and you're like, this is my area. I know what the ARVs are. Like I've got clients that are looking to buy in this area. So we're flipping this property, I'm gonna have somebody for you. Like that might be part of it. Get serious about your education. Elon, your question about how do I get good at this? Like keep doing educational things. And then finally set expectations. I think this is one of the most underrated things that we can ever do with clients or anybody, spouse, a friend, like anything. Like we fail quite frequently to set expectations. And that can be really bad working with investors. So, my expectations are like, hey, I'm gonna get back to you. It might be the next day, right? Like that's some of my expectations, because other people might set a different expectation. I'm available all the time, like 24/7. That might be some of your value proposition, but it's not mine. So make sure they understand it and make sure you're a good fit. Because like I said, every investor is not going to be good for every agent, and you should find that match. So any questions on that? We had a lot of good dialogue around it. Cool. So now we start asking the question of, okay, I've got some value proposition. And so you want to define your lead generation plan. And so I talked earlier about a 135 or a GPS, and this is actually one of my pillars in my GPS. And so this is kind of what it looks like for me. But before I get to that, it's really understanding like, what do you want to do? And then putting that into some sort of structural thing where you're like, am I doing that thing? Right. And so for me, it's, recording videos with one of my investors. So one of my investors started a YouTube channel. And he's doing some more property management and stuff like that. And so, he was a relatively early investor. And so he didn't know a lot. So his challenge was he was making these videos, but like he didn't really know kind of what he was saying and things like that. And so for me, I was like, I'll come on your videos, you do everything else, and then just let me plug, my email and stuff like that at the end. And I've gotten a ton of clients from that. And so for me, if I need more clients, I just do more videos with them, right? And so that's something where I'm helping him out and he's helping me out. My strategy too is to analyze 10 off-market deals a week for clients. This ends up being a lot more than that, right? I probably need to adjust that number at this point, but I probably look through at least 50 a week. And that's just the things that end up in my inbox. And then there's also all the auto searches I have. So really, I'm probably looking through 100, 150 properties a week, probably only 10 of which I'm actually going through and doing a more in-depth pro forma, because I generally know what that's going to look like really quickly, just because I've done it. We host 4 investor seminars a year. So if we're really light on investors for some reason, then we're going to do that. And inherently, what you end up finding is that you probably get a core of 3 to 10 investor clients that are going to actually fulfill this priority enough. So you only generally have to lead generate to replace those people or to kind of fill in the gaps if they're buying 2 properties a year. So, if you want more deals than that. For me, touch base with 2 new developers a month. So now this is getting into like the commercial side of stuff, right? Because I want to look at people that are actually have a purposeful business behind this, not just people that are investing for their own personal stuff. And then posting on Bigger Pockets once a week as well. So that's also, when I do that, that's a huge bonus, because people see, even just going in and putting in my own investment deals and not even posting or anything like that, people look at them and say, oh, wow, great, like, you actually do stuff. And then people actually ask me questions as an investor, and I can say, well, if you're looking for stuff in Baltimore, the Baltimore area, I can help you with that, right? And so that's a huge lead generation thing. And so yours might be radically different than this. Lonnie, what's that?
So when you're looking to like develop a relationship with a developer, right? So do you do the same process with going through Facebook and just going to different networking events?
Yeah, there's different ways. Like for me, I'm on the board of the Small Developers Collective now. And so that like inherently that opens up a whole nother world of people. You know, it came through just like asking questions. So went to a meetup, met a guy, one of my good friends now, Jack Beer runs Dominion Property Group, and they have, probably 1,500 or so rentals throughout the city, if not more. And then they also have a huge hard money side of their business. They're like one of the biggest in the region. And so, you know, through him, he's introduced me to other people. And so, you know, now I know those connectors that like when I have a good development deal, I'm going to go to those guys. And so like we actually ended up selling like a pretty good sized land deal to Jack himself, right? But I learned about him through going to a meetup and then chatting with him afterwards, learning he lived in the city. Then, you know, I like to play ultimate frisbee, so I usually get a group together to do that. He came to that a couple of times. Right, we just like build a relationship like that. And I know Jack is one of those connector guys where if I have a good deal, he's going to know 5 or 10 other developers because that's all he does. He does development. And so if you find those connector people, that's usually where you can kind of spread out. And so those are through, Lonnie, like you said, like you could go on Facebook and just, you know, cold message people, or LinkedIn is probably a really good place too. If you're looking for more developers, just kind of like, you know, search developer, right? Go to things like BizNow events. You know, that's where like the commercial guys are. And even if they're not commercial, like I go to those right before I was even in anything commercial, because I just wanted to learn what was going on in the economy. So like they always do an event called the State of the Market, and then they'll do it in different areas. They'll do it in Montgomery County, they'll do it in DC, they'll do it in Baltimore City. And so I always love going to those, number one, just to hear really smart people's opinion of what's going on in the market. And usually they do panels and stuff like that. And then at the same time, you get to meet a bunch of people. So there's a lot of really cool, like if you just sit and kind of like brainstorm on different ways of doing this, there's a lot of cool ways to do it. And again, you're creating that deeper relationship. It's not the one-off. So you can actually spend a lot more time on lead generation for like one person, you know, versus with your clients, you know, how much time can you really spend on getting one seller? You know, can you spend a week or two on that? Probably not. You're gonna want to get a little bit more broad than that. Asking for referrals too, like inherently people, especially if they're buying like 1 or 2 properties a year, like they're gonna have buddies because they're probably talking about this otherwise, and they're gonna say like even more than in the regular buyers and sellers space, I think you get more referrals when you do a good job. Because people are like, hey, you know, like my buddy wants to buy a place, I'm not gonna be ready for another year or 2. To buy my next investment, but you know, he needs a good agent. And so you end up getting much more referral opportunity through investors when you do a good job. I always like to, if I'm working with a flipper or something like that, I like to see their previous work because I know I'm going to then have to sell, hopefully, right? Like I'm going to sell that renovation. I also want to understand the numbers they're putting into it, and I want to understand the quality that they're doing so I can get my end number, because there can be a solid $10,000 to $25,000 difference between somebody that designs really well and does a great job at, you know, buttoning up the loose ends versus somebody that's going to come in and leave half the stuff, put a granite countertop in and stainless steel appliances. So I don't want to mislead them on what our ARV is going to be, because I think that their quality is better than it is. And then like, if you really don't understand, like, how do I find investors, then find the deal. You've probably heard this before, but like find the deal and the money comes, or, you know, in our case, find the deal and the investor comes. If you find a really good deal, like message me. I'll buy it, or I'll have an investor that'll buy it if it's really a good deal. And if it's not a good deal, I'll tell you why it's not a good deal. Or if it's not a deal for me, then I'll tell you why it's not a deal for me. So again, those are kind of some of the things that should go into your lead gen plan. But this kind of assumes that you're going to have a lead gen plan. And so first you need to do that, and you have to do it for the other parts of your business too, if you're going to have a multifaceted business and not just be investors. So any other questions on this?
Question. So
Yeah.
at what time, like I work with an investor right now who got it, who got the property I showed him through an auction.
Mhm.
So I'm kind of part of his team and how they're fixing it, and, you know, he sent pictures, it's really great, actually, to the whole team of how it's gonna end up looking, et cetera, et cetera. At what stage do I say, so I'm selling this for you, right?
Yeah,
Because I sent him costs initially before he bought it, and he said, you know, I'm trying to match it to the column you sent me that looks like this across the street. I said, okay, great. So how can I like book the deal, book the sale at this point?
yeah, that's a great question. And so there are plenty of people that will get the listing agreement signed when you get the contract, you know, signed for the first property, or when you close on it, right? Like, and so that is a conversation that can sometimes be uncomfortable, right? Like you kind of like just you don't want to have it because you just want to assume that like, hey, we're good here, right? But then like all of a sudden you see like this happened with one of my investors. He was a contractor that I worked with a lot in DC. And then I think what ended up happening was he got in a relationship with another like romantic relationship. But like
That's rude, I don't.
yeah, I couldn't do that, you know, so.
That was a value you could not provide.
Exactly, that was the value I could not provide. And it's funny because, I mean, he was like, he would buy this property and work on it as a project for a year. So there was lots of time in between. But it was a reality check to me that like, I knew there was lots of time in between, and I didn't stay up to touch with him as much as I should have. Because I probably still could have salvaged that relationship, right? I didn't get that listing agreement signed in the beginning with that investor. And so now fast forward like 2 years, he's now come back. And so he's realized that like, hey, I can help him find the deal flow and things like that, because his other agent didn't know how to find it up front. And then it was an expectations conversation of, hey, if you're buying something from me, let's make it clear, like I expect to be the lister on it, and I'm going to help you through it, right? And all of that different stuff. And so, so you can do it, like there is no too early for it. There is definitely a too late for it. But it also brings up the question that, because you talked about an auction property, right? You might also, especially if you're spending time coaching these people and stuff like that, you might actually set up a minimum commission. And like, you know, if they're buying $50,000 properties, what's that? Even if you get a $3,000, or I'm sorry, a 3%,
Yeah.
thing, like, it's like nothing, right?
Yeah.
And
Yeah.
so I inherently have a $5,000 minimum commission. And so, especially on the off-market stuff too, like you want to make sure that you have that. And then if it's any higher than that, then it would be a 2.5%. And so that's a conversation I have up front, like, hey, I'm getting you coaching
5,000
and
up
stuff
to
like
what,
that.
like 100 or 5,000?
It's just 5,000, right? So if it's a $200,000 property, it's not even really a conversation. But I always have the opportunity to bring it down, right? Like if the numbers just aren't going to work, like, am I going to make it work at 3,500? Like, yes, but now that's my call, right? Like we set the expectations in the beginning, and it's my call if I want to take less of a
But
commission.
I thought we can't.
to get a deal done.
I thought that we gotta do the same thing with everybody.
No, well, I mean, you could, but then you just write it across everything. In your buyer agreement, you can write that any if it's an investor that I work with, I have a $5,000 minimum. And then, a flat fee, if you have a flat fee or brokerage fee or whatever. Or I take this percentage minimum, right? And then you're gonna make up the difference. You're not gonna ask that from the seller.
That's what I did. That's
Yeah.
what I kind of did, but I did 2.5.
Yeah.
I did 2,500. I didn't do 5,000, but I'm nowhere in the level that you are.
And
so-
everybody's gonna be different,
Yeah.
right? Like I make that because, and then inherently the conversation is like, look, I have other investors that I could take this same deal to, or I could buy it, right? Like that's the price of me not buying
I
it
know, the last one, I would have bought it.
too. Yeah,
Thank you.
yeah, absolutely. Question? Okay, cool.
I was.
Yeah, Elon?
How do we make it clear right at the beginning that you should be the lister of this, some scripts?
Yeah, well, like when you're like, they're going to buy the house and then you're gonna, well, I mean, it should actually be through the process, right? And you could do some like, neuro-linguistic programming stuff, right? Like you're talking to them about the comps, right? You're like, yeah, when I list this property, we want to make sure that, like different things like that. So that you have that, like, it's clear to them. And then the way you really make it clear to them is you get them to sign a listing agreement, right? And so, so again, like, that's what I was saying to Angie, like, there is no too early for a listing agreement once the property is even under contract. And so like, that's inherently through that, you're going to be talking to them about condition and things like that, because you're going to be giving them, after it's repaired, it's gonna be like this. And so you can just say like, you're also selling yourself on the listing side, but you can say, when I list the property, this is what I think, and as we're going through, I'll stop by and check on it for you. When we're a month out from completion, like, let me walk through so we can see if there's any changes we should make based off of the market changes. And then, by the way, I've got to, just so I can make sure it's on my schedule, like, I've got a listing agreement that I'll send you as well, so that, like, I'm booking my time to help you through the process, assuming it's a flip, right? A little bit, and then you just show up every once in a while, and then you like take a look, and then you should actually give opinions based off of what you think is going to sell better or not sell better, just like you would anybody else. Yeah, good question though. Cool. So a lot of what we talked about is coaching your client, right? And so you want to understand their goals. And so, are they a cash flow investor or are they appreciation investor? I have a hard time helping appreciation investors because past performance does not mean future performance. And I just have a hard mental block helping somebody. It's like when somebody says like, that's a great appreciation area, like I'm always like I just ask myself, like, how can you say that? Like it has been in the past, but that doesn't mean it is in the future. Like, are the prices now untenable to go up the same kind of percentages and stuff? Like that, it's just like one of those things that is hard for me to understand. So I inherently don't end up working with a lot of appreciation investors. Now, it's probably a bad like move on my end from the sales side, because the appreciation investors are usually buying at a higher price point, right? Because the cash flow happens at the lower price points generally. And so the appreciation, like they might buy a $300,000 or $400,000 property thinking that it's going to go to $500,000 or $600,000 over time. I just have not found a good way to reliably tell somebody, I think the appreciation will be X amount over X amount of period. But again, that might be a different conversation that you have with people. Are they a rental or are they a flipper? You should understand their plan. Again, if it goes back to like, send me a good deal and I'll figure it out. Well, that's not a good plan for them to have. You want to understand, like, somebody, they might have a mix of those two things. They might say, I'm going to flip 2 properties, and then with the proceeds of that, I'm going to buy 1 rental. Great, that's fine. That's good. At least I know what your plan is. But if they're like, send me a deal, I'm going to be looking at a very different deal for a flip than I am for a rental for somebody. And so, kind of a red flag if they say either, like I can go either. Well, you can do both, but what's your plan with them? Because if you don't have a plan, you also have very different resources that you need for both of those. Get specific, we already talked about this. And then again, part of your value proposition is be their goal planner for them, and then hold them accountable. If they said, I'm going to go look at 2 properties a week with you, and you haven't done that in 3 weeks, that's kind of a coaching moment for you to say like, hey, like we need to get back out and get looking at them. And then I would say the other side of that is continue to have expectations conversations. We've been working for 6 months together and we haven't found anything. Like, what's going on here? Don't blame the market, because there are people that are buying stuff right now, right? And so it's not the market, it's something that you're going to be doing if it's a long period of time. And then we have to think like an investor. And so this kind of starts with questioning your old assumptions. And so, I love teaching up here because you guys are in the Baltimore area, and so Baltimore isn't like a scary thing to you. But if I'm teaching this down in DC, like a really easy thing to say is like, let me just ask you a question, like, would you invest in Baltimore? And like most people are like, no. It's like, well, when was the last time you were there? When's the last time you walked around neighborhoods?
You know what, Austin?
Yeah.
Like a real big thing for people to think about is like, I remember back in like in the early 2000s when I was working at in retail and driving through DC down New York Avenue to get to Potomac Yards in Virginia. And it was like, it was a horror show driving down New York Avenue. They would always talk about shootings. They were talking, and like when you drove through there, like half the buildings were vacant. Now those same buildings are going for $1 million plus. And then if you look on the other side of the river in over Potomac, Potomac Yard area, even in Potomac Yard, there's like I remember they were all projects, like very similar to like what Cherry Hill's going through right now. And it's like now those same places are $600,000 condos going up there, 1 bedrooms.
Yeah, that's absolutely right. My mentor Bo would talk about his first property that he bought. It was like one of those like mansions. I think it was either on Adams Morgan or on U Street, or something like that. It was like on a really well-known street now. And he was like, yeah, they like found a guy, shot to death a couple doors down, after he had bought it, while he was living there, right? Like he lived there for a bit. And so, like things like that's pretty reminiscent of some of the Baltimore stuff. It's actually much worse than Baltimore, right? So like get out and like, for me, like I probably actually have to question my assumption. Like now I've gotten into like a nice groove, right? Like eventually a groove can become a rut. It's like one of my favorite commercials. A guy's like in the groove and he's like, like really sad and stuff. And the people are like, you're in a rut, dude. And so like it's hard to determine the two. But like I actually probably have to learn how to invest outside of Baltimore again, right? Like I actually have to look at it with my clients, right? Like I might not be investing in, Howard County or Carroll County or something like that, but I actually should probably retool my brain because some people do want to, and there's a lot of opportunity there. And so that's like, I'm always questioning my own assumptions. So that's something that we can help our clients to do, and we can do it for ourselves. And when in doubt, go seek as much truth as you can. If you're talking about areas, go walk around an area, go see what development is happening there. Go talk to investors that are invested in that area. Walk on the streets and talk to the people. Like as much as like it's kind of scary sometimes to go in a neighborhood and you got 10 people on a porch next door. I love talking to those people and saying like, hey, what's going on with this house? Inherently, people love to talk about real estate, and people love to know what's happening. And they'll be like, oh, that was old Sally's house. She died 5 years ago, and she's been in disrepair since. There's a squatter there 2 years ago. They finally got him out. Like you learn a lot. And so that's a great way to question old assumptions. We already talked about this, learn to analyze deals. I think it is hard to be an agent without understanding how to analyze deals. It's hard to be an investor agent without that, right? Create your own pro forma. And this just like, if you can create your own pro forma, your own financial analysis, it demonstrates some sort of mastery over the analysis process. And so like, it's almost like a test. If you could go sit with an Excel file and do it, then you pass the test, right? And somebody asked me, I was doing a talk last week about this, and they asked me like, well, how do I know if it's good or not? We'll take somebody else's pro forma and plug in the same numbers and see if you get the same answers, and it's really not complicated. My whole pro forma is built on the sum function. Like people that know Excel will like watch me do functions. They're like, why are you even putting sum in there? Like you can just do equal. Doesn't even matter, and I'm like, I don't know, this is how I like learned in 9th grade, and I've been doing it like that since. There's only one complicated function, I just YouTube it every time. It's just your mortgage function. So you can figure out what your mortgage is every month. That's the only thing that's tricky. Everything else is some sum function and just understanding the relationship between factors and numbers, right? And so that's a huge thing that I always think of, because people that just use my pro forma, like they don't know when something got changed and they didn't know about it. But I could be driving down the road, and Elon, you could call me and say like, hey, I'm getting like a 500% cash on cash return, but like I don't think it's that good of a deal. And I can walk you through what you might have done wrong. Like check this, check that, and then invariably something ended up getting mistakenly changed or something like that. And then finally, understand how your clients think of risk. Like this is something to really understand. Number one, what is risky to them? And number two, is that real, and can we change that? And so it's really easy for me sometimes because I can give examples from my own my own portfolio. And so I can say I owned a house 5 blocks over, and it was great. Or the exact opposite. I'd steer away from that. Like an area that I really don't like is Brooklyn. Love Cherry Hill, hate Brooklyn. I've owned stuff in both places, right? And had a radically different experience with the type of tenant you have, what's going on in the area, things like that. Yet they're so close, and most people actually lump those two areas together. And so that's a good value proposition that I have for a client that's, if you want insane cash flow on paper, look at Brooklyn. You can buy 2 units that rent for $900 a piece for $100,000, right? Like that's insane cash flow when you run the numbers. But how often are you evicting somebody? How long does it take to get a tenant in there? Things like that. And so that's a conversation I have with a lot of my investors. And then I'm just going to give them some facts, and I'm gonna like let them make a decision. I still have people buy there, right? And then I get to watch to see how their performance goes at the same time. So those are some of the things to learn to think like an investor. Any questions on any of that? You want to do something?
I have a question, being a new agent, was once a time, but anyway, so if someone from out of town says to you, which they have, there's some good things down there that I know has money to invest in Baltimore. As a new agent, do I just say, call you, can I get a referral fee, because I don't know what I'm doing? I mean, how do you, realistically, because this is what I'm thinking about, if that person follows through, how would you handle it?
Yeah, it's a great question. In this market centers, you guys have great coaches. So I would utilize some of your resources with coaches. Also agents, right? Like there are lots of agents in this market center that are like, you have a pretty good investing market center. So like ask your team leaders. Yeah, you guys can connect, like productivity coach, like things like that. So I would still take those people on. And I might caveat your buyer with like, what is your value proposition? Like, I'm gonna work really hard. Yeah, right. Like now you know kind of what to ask, and then you can say like, what are you gonna do? Like I'm gonna work way harder for you than, like, quite frankly, like you're probably gonna work way harder than I would for a client. Now I'm gonna have much more stuff coming to me. I can do it quicker and things like that. But if somebody wants to get out there, they want you out there twice a week, looking at stuff, things like that. Like I'm probably gonna get busy sometimes and need to send it to my team, or it's gonna take 3 or 4 days for me to get back to you. And a lot of people are okay with that. Because I know like when I have something that's hot, I'm gonna find a buyer for it. If you're sending me stuff that's like subpar deals or something like that, I'm gonna look at it quickly and be like, not a great investment. You want the breakdown for it, like I'll be able to do that for you in a couple of days when I have some time. But know what your value proposition is, and then find the resources. And this market center I know has a lot of good ones. So yeah, that's a good question. What was your name, by the way?
Cynthia.
Cynthia. Okay, thanks. Elon.
Going back to that subject of trying to introduce new markets to the investors, I've had this challenge. Let's say the other investors here in Baltimore, they say we're looking for something close by, but then I say, oh, if you look at Essex or somewhere in Western Maryland, an hour away from Baltimore, there's great deals over there. Then it's always too far. We can't get our workers there. How do you handle such an argument?
Some of those things are legitimate, like structural problems. Like my guys can't get out there, and I'm not willing to go get new contractors out there. You also want to know, like, why are they priced that way? Like my first true investment property was in Hagerstown. It was a 3-unit. It's a fun story in the project, but I went to it because I was like, this is something I can afford. It was like 140,000 or something like that. I was early. I didn't have a lot of cash. And I didn't really know much about Baltimore at the time, but it seemed like a really good deal. For a 3-unit, $140,000, it needed some work, but that was something I was willing to do. And so, I went up there, my best friend, who is now my partner in my development company, ended up co-signing for me. We went and we worked on the project and stuff like that together. And I probably wouldn't buy anything there again, largely because I do like the concentration stuff in Baltimore. No, I would make the jump to Essex or Dundalk, right? But you want to understand, again, come back to asking questions. Why is that investor saying that? And then if you really think there's good value there, you might want to find an investor there, right? And so not every deal is going to work for every investor, even if it's a great deal. Like you could bring me a really great deal in Fells Point, and like I'm probably just not interested. It's just not something that like I inherently like believe in that area. I might buy it, but most likely not. So it doesn't fit my criteria that I set, where it has a front porch and stuff, like nothing in Fells Point does. So it's just not going to be great for me.
Why do you want a front porch? Why is that important to you?
Yeah, to me, I've just found that people that can sit on their front porch, like they just love that. I love renting. Like one of those things that he taught me at the McKee group was to invest just below the middle. And so if like Fells Point is not just below the middle, right? Like Fed Hill is not just below the middle.
What do you mean by below the middle?
Take the middle of an area. And so like when I would say the middle of it, I would take Baltimore, right? And so the middle is probably 200,000, right? Like if we take like the really low price point areas and the high price point areas, like probably 200, 250,000. And so I want to invest just below the middle. And so you heard me talk about my after repair value being, 160 to 200, maybe 225, right? And this is on like a single, it gets different with multifamilies. But that's where I want to invest because that's a price band I feel really confident in. The working class that can afford that property is one that I am super confident it will always be there. Will the luxury people always be there? No. Will the young professionals choose to live at home for a little bit versus, economic, stuff hits the fan, all of a sudden everybody, like we're in a recession, right? Which we arguably are right now. And so am I going to choose to stay home a little bit longer? Am I going to stay with more buddies versus rent, luxury apartment or something like
I
that?
see what you're saying. You're kind of putting together an image for that middle class of sitting in front of your porch having lemonade kind of thing.
Yeah.
And
I
you're
just
selling
found-
that idea.
Yeah, and I found when people that have green are a little happier. If it has a front porch, it probably has at least a little passive stuff.
Absolutely.
So, and then you get into some of these areas, like it's why like some areas I really like Park Heights, I really like even though there's a lot of vacants. Versus maybe some other areas like Middle East where like you just got the straight to sidewalk kind of stew. And it's like, I don't believe as much in that area, right? Right or wrong, that's been my risk assessment over the years that I've created.
Can I ask you your opinion around Johns Hopkins Hospital, which I'm getting so many calls, investors like, I want to invest around there, I want to invest around there.
Yeah.
I mean, is that something that you think, just from your opinion, within the next 5-10 years would be beneficial? I mean, I know Patterson Park is already kind of reached that.
Yeah, but like north of
But
that.
a little bit north of that, yeah.
Yeah, you want to always try to reason things out, right? And so like if I probably wasn't as bullish on it as like now, I might be a little bit more because of the Union Station project, right? Or Penn Station. I always get confused. Penn Station, yeah.
And
So
then Johnson Square is still on the news a lot.
Yeah.
They're improving that area, that's why everybody.
yeah, Johnson Square, Oliver, I like those areas. Middle East, and it's got a commercial corridor that I still don't believe on in Monument Street, right? And so, usually development goes commercial to residential or one of those has to really pop first to drive the other one. And so that area, not as much. Johnson Square, Oliver, one of the cool little nuggets that a investor told me early on was to look at, especially in Baltimore, look at geographical boundaries, right? Why is Fed Hill and Locust Point the way it is? Well, it's a peninsula, like it's surrounded by water. And so it's really hard for somebody to just wander into that area to cause trouble. They have to purposefully be going there, which they might, right? Like people do that. But there's also a lot of crime of opportunity that happens. Like I would venture to say that most crimes are crimes of opportunity. And so then you look at an area like Hamden's another good example, right? Like to the west side, you have the park. To the east side, you have Johns Hopkins University. To the north side, it kind of bleeds into Medfield and some other stuff. To the south side, it kind of comes to a point, right? And so like geographical boundaries are pretty good there. And so that's why it's always stayed a pretty good area. That's why I like Cherry Hill. Cherry Hill is very secluded if you look at it. There's really only one road in and out. To the north, it's bordered by water. To the south and kind of all around the bottom part of it, it's got train tracks, right? And so as soon as that area starts to get better and you get, and there's a lot of community pride and things like that there, it's just going to continue to build upon itself, right? So the thing I don't love about those areas is there's not good, clear defined geographic boundaries except for the cemetery and the park. So, but I would buy something in Oliver or Johnson Square because I do like it and I do think that it would have the numbers that I'm looking for. Although now it's starting to get the after repair values are getting higher than what I think, it would cash flow for on my stuff, right? So, but good question. And you always want to reason through with investors and stuff like that and tell them reasons why it might or reasons why it might not.
Right.
And so my answer to somebody that was an investor that was asking me that is I would say, well, it might not because of geographical boundaries, but it might because of the development of the hospital and also because of Penn Station and what that's going to do. And you've got this, coming north wave from, Canton, Fells Point, Butcher Hill that's coming up that way. So good question.
Thank you. I've used your, what you said in the last class quite a few times about just the first look when you're buying a property, whether that brings 1% of the rent in just as a first look.
This one.
Yeah.
Yeah,
I've used that a lot. That kind of stuck with me last time when I walked out.
it should. It's one of those ones that's like really good. So let's talk about it for a second.
Yeah.
The 1% rule. This is a general guideline, and it's a relationship between the all-in price of the property versus how much it rents for. And so when I say all-in, you also might be, renovating a property or something like that. And so if you're buying a property for $200,000, the 1% rule says it should rent for $2,000 a month, right? Everybody get that relationship? 2,000 is 1% of 200,000. So that's kind of like the relationship there. So it's a general guideline, and you're going to adjust the numbers according to different things, right? And so in DC, it would adjust down because it's a lower cash flow market. So you're not going to be able to find anywhere near 1% from DC. You're going to be like a 0.5 or 0.6% if it's a good deal. In Baltimore, we might actually look for more than a 1% roll rate. Really, I think the number right now is like 1.25 to 1.5%. If you can find a 2%, like that's like pretty good. That's the Brooklyn that I told you about earlier, right? Like you can buy it for 100 grand and it rents for 1,800, right? A 1.8% rule. Well, you got to ask yourself, like, well, why does this happen if it's outside the norms? The other thing to know is the 1% rule kind of falls apart at the lower end of the spectrum. So let's say under 100K, and at the higher end of the spectrum, so above 400K or so. It really just doesn't work in those extremes. And that's something for me to learn. I talked about earlier, like where my assumptions might be off. It's to learn like what are the good metrics above 400K, right? Like there are other investors that when they're investing for equity or something like that, it might be a little bit different.
So can you explain that last point one more time?
Yeah, well, if you're buying $1 million property, it's probably not going to rent out for $10,000 a month. But that doesn't mean that it's not a good deal. And so like when you start doing, the numbers and stuff like that in there, you actually can get higher cash flow, even if it doesn't meet that 1% rule. Usually it has to do with how expensive or cheap debt is, because that's usually going to be a big factor in there. So if debt's really cheap, then you could still buy something really expensive and have a cash flow really well. If debt is really expensive, like it's getting now, then it's going to change at the upper end of that spectrum. Same thing with the lower end of the spectrum. If you're getting something for $50,000, probably going to rent higher than $500 a month. And if you actually do the stuff out, because there's kind of these structural things that you need to pay for. You need to pay a water bill. You need to pay repairs. Like those are generally going to be numbers that aren't going to change a whole lot with what size of the property is. Now there are other percentage-based things like taxes that will, but some of the other stuff won't. And so that's actually, you probably need like a 2% rule at a $50,000 price point. Whereas $1 million price point, you can probably take like a 0.5, 0.6%. And so just saying, there are times when the 1% rule doesn't work great, but it's a really good, like what I want to get across to you is that there's a relationship between the rent, the monthly rent, and the purchase price of the property. Different areas are going to be different. If you're investing in an area, like part of the reason why you can go lower in the percentages with DC is that taxes are really cheap. Our tax rate in Baltimore is 2.3%, in DC it's 0.85%, right? And so like it's a very big difference there.
In the county, it's like half of what's
In the county
city.
even, it's different.
Insane.
Yeah, it is different in the county. Yeah, what I also find is that sometimes the value is artificially low in the city.
Yeah.
Right, and so it actually ends up being my taxes aren't that much more expensive than in the county, although the tax rate is. So again, those are things that you kind of like learn to get into. But yeah, I think this is a really good relationship here, and it's a really good takeaway that you can start analyzing stuff. It's my first thing when I'm like, that's the way I get through 100 properties, right, in like an hour or two, right? Because I can immediately throw stuff out that either I don't like the area, I don't like the structure of the house, or it doesn't, it's nowhere near realistic.
And these are only for properties that you're going to keep and do a cash flow on, not flip.
Yeah, this isn't going to be a flip rule. Yeah. Cool, good to bring up. So real quick, finding and structuring deals, I think this is where we can provide some value at. So off market, I already mentioned wholesalers and getting on their list. We talked about that. Your own listings, again, like if you have a seller that might be like, hey, I just want to get rid of this thing. You could actually say like, okay, well, I've got a buyer right here, right? Like we don't have to do 1 million showings or whatever it might be. Other investors, so like you can actually get deals from other investors. I have a buddy that's looking to sell something, right? Great, like let me chat with them. Wholesalers we talked about on the MLS. we talked about this a little bit too, is like, don't work with everybody. You know, like, you actually, if somebody is wasting your time, don't work with them, you know, have a realistic conversation with them. This is where an expectations conversation comes in. And then you might actually decide like, hey, I'm not the best agent for you, truthfully. And, you know, ideally, if there's still somebody that's motivated and there's just something that's not working out between you all, you can maybe refer them to somebody else or something like that. But this is especially true with investors. Like you need a big lead funnel to find a good investor. You probably need to talk to 10 investors to find a really good investor, right? Everybody wants to be an investor. So that's just something like, it's okay to do that.
I have this investor I'm working with. We worked on 3 commercial properties, about properties of $400,000. And the listing, all 3 listing agents on the phone gave me a nice lecture that you're wasting your time working with this client because of the questions he was asking. He wants to know, he wants to see the BGE deals for the past 2 years and water bills, or he wants to know there was one building. He wants to know how many of the building is in Baltimore City, and he wants to know how many of the tenants are Section 8. The other agent, the listing agent was telling me, like, okay, why does he care if how many of them are Section 8? He can do whatever he wants once he buys it. Why is it that? So I want to see what you have to say about this.
Yeah, you take that through your own filter. And so like if an agent was to challenge me like that, so his name is Brad or something like that, I'd be like, Brad, it actually makes a big difference because we're gonna have to turn over those clients. But I know I have guaranteed income, especially in this time of COVID and people aren't paying, probably going into a recession. Like he wants to know how many of those clients are guaranteed government payments coming. And what's the percentage that they're paying too? Like this is something that I would want to know. So like Brad, I think if you're going to represent your client the best, I've got a buyer that's ready and willing here. So like, can you find that out for me? Like I'm going to need leases in the process anyway, so I'm going to find that out, right? So is that agent just being lazy, or are they actually like, is there something wrong? So like 2 years of BG&E, like if I was selling a property and somebody asked me for that, I'm like, I'm not. I'll give them the last 3 months, and then if like one is like super high or something, I'll give them a couple other months to show that it's normally $120 a month or something like that.
The
Right?
water, clean the water.
Or the water, yeah, like
Yeah.
any of that, like BG&E water or
Yeah,
whatever.
electric water, yeah, if he has to pay for it, he has to assume all the responsibility.
Yeah.
And the cost. Yeah, but
But
2
you-
years might be a lot.
You can also go back to your client and like, this is where you negotiate a little bit. Like, look, the seller and the listing agent isn't working with us too much on this one. Like I have a deal like this right now. So I just wrote in the contract that our inspection contingency goes until 24 hours after they've provided us all of the leases. So they were like, they were having a hard time getting us leases and stuff. So it's like, great, we've got to, inherently like, I've got an inspection contingency that keeps going and going until they get us that stuff. So it puts the onus on them. You can back out at any point in time after that, right?
That's great. How did you list that? How did you phrase that?
I just said that our inspection period continues until 24 hours after the following documents are received. And then I wrote, if I want lead cert, if I want leases, like whatever I want.
I mean, if they come to inspect the property today, it's not done till 24 hours until the.
Exactly. So I can still get my reasonable stuff done, but now I'm, if my client's like, I need leases, then I just say like, look, let's go ahead and do this. They're not cooperating with us. It's competitive, or whatever it is. I'm just going to write this in here. They're, if they can't provide that stuff, they're probably not the highest quality agent anyways. So, I'm going to tell him that that's in there, but he's probably not going to register in his brain that like, this could go until the day of closing, if you don't provide it to us. And then we can say like, look, we can back out right now unless you get this stuff for us, right? And so you want to like, you want to find creative ways to make sure that you're still representing your client and getting what they want, but also you might need to chat with them about the 24 months. It's like, what are you trying to accomplish here? Like, what do you want to know that you couldn't find out in 3 months or 6 months or whatever they reasonably be willing to tell you? But then other times it's reasonable. Like I want to know what kind of asset we're dealing with. Is it guaranteed income or is it all market tenants? Like this is something, and you could go deep with that and you could be like, hey, Brad, we're not asking you when the inspections for all of them, where the yearly Section 8 inspections are. We're not asking you if they had to repair a bunch of stuff in that. Like all we're asking you is like, are they Section 8 or not? And we're going to need to see the leases anyways. So. But if that's your third question after you're saying 24 months of BGE and 24 months of water bill, then you might just be frustrated. Just be like, dude, I don't know, you know, at that point. Yeah. Anything else? Cool, so I put this part in here because it can be tricky, and I just want to bring this up as something that might actually come up in the fact that if you're investing, any of clients that are investing, sometimes it gets hard. Like you have a good deal, who am I going to go with? And so you just have to have your rules behind it. And so like for me, anything on the MLS, I'm always going to send to my clients first. Anything off market, I will have the opportunity to buy that first, right? And so that's kind of like my rule. If I really want to do something, but most of the time I end up offering it to the clients first, because I just want to have that kind of relationship. Yeah.
Some investors tell you anything on, and if it's on MLS, it's not even true.
Yeah.
What are you gonna say?
I mean, my answer is I bought things off the MLS. Here, let me show you this one that I bought off the MLS. Like it's not true. And so, yeah, I mean, it's a quick answer for me, right? And so like my other question, like if I didn't have that, I might ask them. So you're telling me that no investor has bought anything off the MLS in the last 6 months? Pick a number of time. And like, what are they going to say? They're going to say yes. Then I'm going to be like, well, hold on, like let me go find some deals, and I'll call the buyer's agent and say, hey, was this guy an investor? And then I can tell you that, right? So like there are creative ways around that. And like over time, you get bolder and bolder. Like now, like I don't have much like of like. I'm just going to tell you like my experience and stuff because I'm very confident, right? And then like once you do these different things, you can have quick answers like that. It's going to take you time to get stuff like that, to understand that. Like if an agent doesn't know what they're doing, and with commercial agents, you get this a lot because they like a lot of times they don't co-op as much. They're not as like generally nice. Like usually they know, they're trying to keep the deal in house and stuff like that. So it is a challenge to be a residential agent representing somebody that's looking at commercial stuff. So you just have to know that. And so, like now, again, like I built my persona a little bit. So if an agent is questioning me, I'm like, I own 3 office buildings, like I understand how this works, right? But I'm also humble enough to know there's still a lot of stuff I don't know how it works. So if they're really giving me a hard time and I actually don't know what they're talking about, I'm going to turn around and say, you're right, I haven't done a lot of this. Can you help me with this? I really think this client might be good. Can you help me work through this so that we can see if we can have a deal together? So like one end of the extremes, and like over time you'll find out how you want to deal with other agents. Like, am I going to be like a little bit testy back, or am I actually going to be humble and kind of ask back, things like that? Yeah, good question. And then you're going to have to decide which client do I send to first. If you're working with 5 investors, this can be kind of a hard thing, right? Like, and it can get a little bit tough. You send to one investor and then it goes under contract, and then another client sends you like, hey, I would love this property. And you're like, ooh, I got that under contract with another client. So you just have to figure out, like, I don't necessarily have a good answer for you on how to deal with that, other than by a case-by-case basis, but it's something that you just want to think about, Same thing right there. Cool. We are running up on time here. Wow, 90 minutes flew by quick. This is another whole class, right? Like we will teach this at some point on creative financing. So we'll get that one on the books. That's been one that I've been excited to teach for a while, because there's a lot of different things. But the quick takeaway from this, you just want to understand how your client is financing stuff and make sure that they actually can finance it. Just like you would make sure somebody got a pre-approval, you want to make sure that they have the means to purchase the deal. And so you kind of want to go through that.
So do you ask for a bank statement of, 300,000 or whatever it is that they want to buy a house for all cash?
I usually won't ask for a bank statement, but it's going to come out in your coaching conversation when you ask, like, how are we financing this project? And then we're going to ask the other questions beyond that. If somebody tells me that 300,000, I'm probably going to take their word for it, because if we get someone under contract and they don't, like, I'm just not going to work with them, right? And you'll be able to kind of tell when people are like, BSing you or not. Most people aren't going to say I have $300,000 when I don't. And I'm not going to be that person that's like, you have to show it to me or I'm not going to work with you. But like now I do get to the point where I do have, like, I don't want to work with somebody that doesn't have at least $50,000 in cash. Mostly because I also don't want them to get in a hard spot, right? If you have $10,000 and you want to invest, it's really, really challenging. And you could be like, one of the few ways you lose in real estate is you run out of money. And so I don't want to have a client that's in that position, right? But there's a lot of different things you can do in this. That's kind of my point. And then lastly, this is just what my pro forma looks like. And so I'm not going to spend time and going through this too in depth, but basically the two things that you want to make sure in the pro forma is that one, your calculations are correct. You know, you're timesing it, not minusing it or something like that. And the second is just that you have all of the different factors in there. Do you have vacancy factored in? Do you have a capital expenditure where, you know, you're going to have to redo the roof at some point, right? And that's going to be a big expense. So do you have these things factored in here? And inherently the number that you're going to get, the FCF, the free cash flow, inherently that number is going to be lower than what you make every month because it has all these other things factored in, you know, and so it's probably a lot more accurate on a yearly basis than it is on a monthly basis. But this is how I talk about my cash flow. It's always off the pro forma amount because my actual amount is probably going to be higher. So that's really the big thing there. If anybody wants a copy of this, shoot me an email. This is my email, akcarroll@kw.com. And we do other classes on that one as well. Probably a big part of the creative financing will be starting out with the pro forma and talking through a pro forma because a large part of the pro forma is like, what are your uses and sources of capital? i.e., you need X amount for a project. Where is that money coming from? And so like when you start getting to commercial lenders and stuff like that, like that's really all they want to know. That and the performance of the property, whereas, you know, otherwise you won't need to know. But in order to do that good pro forma, I need to know, like, are you just leaving money in it? Are you trying to refinance and pull cash out of it? Those are going to be different things, different loan amounts and stuff like that. So again, if you guys could please leave feedback. Again, I'm going to kwueval.com. Instructor not in drop down, Austin Carroll, 2 R's and 2 L's.
Oh, this is what they go to?
Yes, yeah, you can do it on your phone. You can do it, you know, anywhere. It's super easy. And it's just kind of like a couple bubbles and stuff like that. So I'm going to hang out for a little bit and answer some questions. You know, we'll be back. I think, I don't know if do we have next month's on the calendar yet?
Yes. I don't have the calendar open yet, but I can.
Cool. So if you guys enjoy this, if you enjoyed my teaching style, then feel free to look at the other stuff. We're not always doing investor stuff. I love teaching 6 personal perspectives, which is really kind of Gary Keller's roadmap to success. And so like that's one of the fun courses that we teach here as well. And so look out for those classes and you know, please leave feedback. But I'll hang out and ask, you know, answer any questions. So anybody online have any questions before we go here?
Really quick, your next class with us is June 3rd. It's the KWA Millionaire Models of KW.
Oh, cool.
Yeah.
That's an exciting one that I actually put together because there's so many different things in Keller Williams. You know, you've got, you know, these different classes that people talk about. You got all this jargon, you've got things in the Millionaire Real Estate Agent book. And so I wanted to break down that stuff and kind of like help somebody that's newer. It's really good for somebody that's newer at KW. And particularly for people that want to get more involved and understand what classes should I take? You know, how do I get more involved and understand how things have kind of work in the Keller Williams ecosystem. So
Thank you.
you're welcome. Cool. Anybody got any other questions?
Nope. It was a good class though, Austin.
Thank you, Lonnie.
As always.
I'm sorry I missed it here, so I'm glad I got the opportunity to see it.
Yeah, thanks for logging on, man. I appreciate that you're aware of stuff going on in other places. Cool. All right, everybody. Well, I'll see you next time. Yeah.
So